Hey, welcome to the closing beat, everybody. Happy Tuesday to you. How's it going? Let's just turn that off. Hope you're having a good day out there. We are financial advisors here at Jazz Wealth. Hope you'll check us out. You know, you can schedule a call right on the website there. We have no sales pitch. Just give us a call. You know, we'll see what we can do for you, help you out. We love working with people who are long-term investors, but also like the planning along the way, you know, instead of that like one-time plan thing. Hey, anyways, we don't have a lot to talk about here with the stock market, which is fine with me. We'll cover some earnings. We'll cover some different things that are going on out there. And then, of course, hopefully you'll learn something along the way. If you're in Atlanta this weekend, Saturday in particular, come on out and see us. We'll be down. I forgot to get the name of the place. Can you look that up while I'm doing this? Somebody? What's the Atlanta DCI show on Saturday? Just so I can give the stadium or whatever. We'll be outside hanging out. Anyways, all is good. Hello, everybody. Welcome. Let's take a look at the stock market. Here is the S&P. Where are we right now? Are we bullish, bearish, or we don't know? Well, it depends on your time frame. If you're a longer-term investor, you have no reason to be bearish at this point. You might be a little bit profit-taking. I'll give you that, right? Some of the stocks in the S&P have had incredible runs. And so maybe you're like, you know how they say overweight, underweight, equal weight on TV? That's a fancy way of saying we have more shares than we want to have. We are overweight. We have just the right amount. The soup is just the right temperature, so that's equal weight. And underweight means we're not giving up on it, but we're going to have less shares just in case. We're underweight quite a few things actually at this point because they've had really great rallies, and we're looking for the market to pull back. However, is that going to happen this week? Is it going to happen in a month? How do we know, right? Well, in the midterm, we have a very nice, slow and steady uptrend going on. That's perfect. No problem. That can go on forever. The bulls take the stairs, the bears take the elevators is the way they say it. So what that means, you know, is we trend higher for long periods of time and then quickly we fall like an elevator and then we go right back to trending again, right? So if we're looking at a long-term picture here, we're very much fine with what's happening. Last week's pullback gives you a little opportunity, some stocks more than others. We covered that yesterday. But then you go, what about the rest of the week? Where are we? Do we continue to believe that this rally will go, or is it starting to fade a little bit? Well, there's a couple reasons or a couple ways to look at that. The first is we have had a pullback to a known location that people like to look at. Technical traders like to look at. It's a 20-period moving average, and it's roughly about a third of this pullback for Fibonacci people out there. Now, the last couple days, we've seen an attempt to move higher, and this is really short term, right? We've seen an attempt to move higher, but that faded today. Doesn't matter. It's called an inside day, which means we can't get anything from it. We're not going to learn new information today because we have not fallen to break the low where we last knew people were interested to buy. And I'm really simplifying it here instead of going major support, minor support, blah, 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 right? So we know people bought here, but today there were not enough buyers to continue the rally, nor were there enough sellers to break down those buyers that just bought. Okay, cool. So in the short term, we don't know. We just sit back and wait. You zoom out, right? And go, oh, the big picture is still very much bullish and intact uptrend. That's fine. So don't overthink these days where the stock market, you want to get something out of it, right? We were largely flat, you know, for the majority of the day, back and forth and back and forth. Don't overthink it. It's one of those days you go, all right, I'll look at earnings. I'll find some other stocks. Anyways, looking at the NASDAQ, that was pretty much the same picture, just a little bit more volatile, right? If you look intraday at the NASDAQ and the S&P, every rally was sold hard. So it was like a quick little pop and then bam, and then a quick pop and bam, all day long. So it just shows that there was a tug of war between the buyers and the sellers. That's really all it is. Anyways, the NASDAQ has the same picture. However, it pulled back a little bit more to a more popular location, the 50-day moving average, which is always blue on my charts if you're looking there. And it's the same concept. It's an inside day. We didn't scare the buyers from the other day, but we didn't motivate any more buyers to come into the market. Now, the Russell is a completely different story. Absolute beast, right? There were no pullbacks in the Russell today. If you look at the intraday chart right until the end of the day, the Russell was up, 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 just going along, right? And that's people going, hey, I see what's happening with rates there. I realize there's a new opportunity. It's also the FOMO traders in there as well. You've done it, right? With GameStop, AMC, Bitcoin, all that stuff. You've done it. That's what's happening now in the small cap space. I happen to like that because I'm more of a small cap guy. I like looking at those little stocks like that and seeing what they're doing. They're easier to analyze and they're not as complicated debt-wise. So probably a lot more coming on the old Russell 2000. Okay. Moving around, you might have noticed one sector today very weak. That'd be the energy sector. It has been and consistently is the weakest, at least the last couple days there. Over the last 5 days, it unfortunately finds itself down about 2.25% right in here. Today, it was the weakest of all the sectors by far. Loses 1.59% today. That's literally 1% more than every other sector out there. Fine, right? Why? What's going on? Well, look, the price of oil is pulling back. Oil is really tricky here to try to figure out. Oil is very much a trending commodity. Is not now, right? I'm going to have to take back my comment on that one. All right, nonetheless, what we still have is, in first place, communication services year to date. It has pulled back the least, still up 18%, and wouldn't you guess it, tech is the second best. Now, tech and communication services today were, not the weakest, but they weren't the strongest, right? So that weighed on the market. It put a lid on those rallies that we talked about, right? There was an attempt at a rally, and then those stocks just couldn't get anything going as a whole. And unfortunately, that's what you have as far as that goes. Biggest and best performance today, no doubt, and has been the small cap. Small cap value up 1.2. The index 1.1, and small cap growth 1%. Essentially, that just means people were taking their money, backing the truck up, and just dumping it into the Russell 2000. Anything goes over there for the moment. Okay, moving on. Let's look at some stocks in the news, shall we? This is all earnings related here. Spotify hits new highs there. It's a really easy business to analyze. You look at Spotify, and what do? Do they have lots of various things going on? No. You subscribe to the service, you pay money, or you use the free service and they generate revenue by playing ads to you every once in a while. It's really easy to analyze. Anyways, so you go, were there more paid subscribers, or what they call them, premium subscribers, or were there more ad revenue? Do people advertise more and do people listen to it? So that's what we've got going on there. Monthly active users down about 1%, right? Premium subscriber, here, we'll just look at it. The premium subscribers were actually supposed to come in a little bit worse. I looked it up based on what they said when they gave guidance going forward, but it just barely missed. The issue is the weakening ad-supported revenue and weakening paid subscriber revenue, or premiums as they call it there. So we're trending in the wrong direction. Hits new highs today because the CEO's like, hey, we see it improving. We're not really worried about it. It's going to be great. We already see those metrics starting to turn the corner. And, who better than the guy to tell you, that actually sees the numbers on a daily basis. General Electric, there you go. Nope, this one. General Electric also hit new highs. Kind of an interesting but sloppy little breakout there. A lot of momentum to the upside, and of course a lot of volume today. They reported earnings better than expected. Guidance was as expected. There was really nothing to throw you off there. Remember, General Electric, used to be this big company. They did everything, right? Remember Jack Welch, right? I got all his books. They're on the shelf back there. Really lean company that did a lot of different industrial things. They basically make engines now. It's literally, it's called GE Aerospace. So it's not the hardest company to analyze, but it's also an easy company to see growth, margins, cash flow, everything. How's that going? So all in all, pretty good there. No issues and nothing really exciting to share with you. UPS, if you saw this one today, right? All the way down here. Normally you would think, I need to look into this. Why? What do we do? The United States is just a bunch of packages going back and forth day to day. That's all we do. We just buy stuff and then exchange it and get a bigger one or whatever we do. So if UPS has a bad quarter or forecasts a bad quarter, we tend to think maybe the economy's slowing down. It's like the Walmart effect, right? If Walmart's doing bad, oh my gosh, they have their finger in everything. Maybe the economy's doing bad. In this case, their earnings missed by 10%. That's a lot. It's a big company, right? So big miss there. However, a lot of it was due to labor costs. And there's one other thing I want to share with you here that we pulled up. So overall, this is a little bit confusing chart here, but the daily package volume, the stuff we're sending back and forth on the cars and the trucks and everything and the planes, is getting better. Daily package volume had been weak for a while. It is now back to what we'd consider a growth mode, although barely, right? You just barely can even see the blue there. So growth year over year in package volume has finally turned back to being growth. So that's that one there. The other part of it is average revenue per package. All right, so a lot of boxes are starting to go around, at least more than there were a year ago. But now are we making more or less on those boxes we're sending around? Here's disinflation. You want to have a good little study on disinflation, there you go. So pricing is weakening for them, and we'll see what happens. But nonetheless, don't look at that and say, oh my God, the economy is slowing. No, volume's strong, right? Lastly, we got PulteGroup. What is missing here? This is not, let's try it. Let's come back and see if that, I think they're missing some data there. Yeah, all right, anyways. So Pulte Homes beats by 17%. Homes. People are still buying homes out there. It's crazy. Orders for these new homes down a little bit. Nothing to be worried about there. And really, it doesn't matter. If you see their profit margin, I didn't get the chart actually. Sorry about that. If you look at their overall profit margin, 29.9%, yeah, we can build a few less homes. They're fine with that. So I think someone figured that out the other day based on the performance of the stock. All right. Anyways, I'll take your questions if you have any. The rain is officially starting here. Typical Florida. Tomorrow we've got General Dynamics. Really not a whole lot. I didn't get to Tesla after hours and Enphase and stuff. But tomorrow's General Dynamics, International Paper, AT&T, Chipotle, Ford, and I believe someone else there. I don't have it on my list. If you like the gold stocks, Newmont Mining, IBM, O'Reilly Auto Parts, and Waste Management. There's not a whole lot exciting happening after hours for tomorrow. Yeah. Representing North Carolina. I mean, we were going to go there this summer, but no, didn't work out. Sold the house instead. You think the pullback is starting leading up to the election. This is it. You think this is the moment in time there. We've done some great classes on that, sharing the data of how that works. So I'm not going to say you're wrong on that one. I like it. Oh, what? You doing some trap shooting? That's pretty cool. Do we have that here? Hey, where was Georgia?
Center Park Stadium.
That's what it is.
Better known as Turner Field. That's
it's right on the highway, right?
Right on the highway.
That's the one.
Terrible spot. Terrible spot.
Center Park Field on Saturday. If you want to come hang out, just let us know. Shoot us an email or something. Haley's been great about organizing all of that. We'll probably find a place to hang out a little bit ahead of time. Otherwise, for the rest of you, have a great rest of your... Oh, Chris. It's just Chris back there, I guess. Full of words. I love it. Hey, enjoy the rest of your day. My windows are down. I've got to go. We'll talk to you later. See you.